Tina Mitchell here with your Money Chat. Redfin reported that between September 2020 and February 2021, nearly 18% of successful offers waived the appraisal contingency. 13% waived their home inspection contingency. If you waive your appraisal contingency, this means that you will have to pay the price that you offer, regardless of what the appraisal comes in at. This could be an issue with financing if you're going with a lower down payment and you don't have the additional cash to pay the difference. The other issue with financing, if the appraiser calls for work orders, the work must be completed prior to loan closing, and you're going to be paying for that work since you waived the appraisal contingency and the seller is not responsible for it. If you waive your inspection contingency, you have two options here. You can do a pre-inspection, which means that you pay for the inspector to inspect the home before the offers are being reviewed by the seller. If your offer is not the chosen one, you're out that cost. However, at least you know that the condition of the home is good condition. The other option is that you have is to not have a home inspection at all. This means that you're just buying it as is and hoping for the best. If you do not move forward with the contract with either the appraisal value coming in low or the condition of the home, you would be out your earnest money. Mortgage Banker Association released their mortgage application data for last week, showing that overall application volume increased by 9%. Purchases were up 6%, which is strong considering the lack of inventory. They are up 57% from this time last year, but that was during the shutdown, so it doesn't really reflect the real year-over-year number. Refinances were up 10% last week due to the little bit of move lower in mortgage interest rates and now showing year-over-year decline of 23%. The refinance share of mortgage activity increased from 59% to 60%, but still remains well below the 75% that we were seeing a few months ago before the interest rates went up. In the US, Federal Reserve has been buying at least $120 billion in mortgage-backed securities and treasuries each month. This is known as QE, or quantitative easing. Now, the UCB, European Central Bank, also has their own form of QE, but they approach it much differently. Instead of buying the same amount each month, they front load their purchases. They are now at the time where their purchases are becoming less and less, which has caused their yields to move higher. Because we are in a global economy, higher European yields could pressure yields in the US to move higher as well. Something that we definitely need to keep our eye on. The newest Fed governor, Christopher Waller, made some comments on Friday that were in line with what we've been saying. He said, whatever temporary surge in inflation that we see right now is not going to last. Additionally, we know that the stimulus is going to have some impact, but once the stimulus checks are spent, they're gone. We also know that bottlenecks that they're going to go away, end quote. This is also how we feel as well. I believe that the inflation will spike in the summer months, but will move back lower towards the end of the year. And while we are getting on an infusion in the economy now causing economic activity and rising of stock prices, once those effects wear off, we will be left with massive debt that should have an impact on economic activity, growth, and inflation. There's a proposal for a $25,000 first-time home buyer tax credit, which would be paid upfront to those who are first-generation homeowners, meaning their parents have not yet owned a home. While it seems to be a noble cause to help those buyers, the last time we did something like this, it ended pretty poorly. We're already seeing price bidding due to the strong demand and no inventory. If this were to pass, it would increase the problem. Wrapping up with housing starts, we're up almost 20% in March, which was much stronger than expectations. The year-over-year figures are skewed a little bit due to the builders not building this time last year, but the figure is up 37% year-over-year. The most important figure to track is the single-family starts, which are up 15% month-over-month and 40% year-over-year. Permits, which measure future constructions, were up 3% and are up 30% year-over-year. Single-family permits were up 5% last month and are up 36% year-over-year. Tina Mitchell here, and that is your Money Chat.